Everything in this video is not intended as financial or investment advice and is for educational purposes only. I am Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. Tuesday once again. I'm going to start with some on-chain stuff, moving towards some correlations, some TA, and then we'll talk about why maybe legacy is melting here and how that correlates with everything as well. But I always like to check, as mundane as this might be, just like to check what's going on chain, making sure everything's okay. I'm going to start with Bitcoin here. Our transactions fine, our active address is fine. Is there anything here telling you one way or another, leading, lagging, what's going on? And thus far, not much change week over week. Transactions still basically flat, right? Not too much going on. ETH as well, very similar, essentially flat here. Not too much going on. Now, if you zoom in on that, obviously it's like, well, not too exciting. But if you zoom out and you say, since 2017, transactions have picked up substantially on the network and stayed on the network, unlike 2018, and arguably the same for Bitcoin here. Some of these are mining transactions, exchange transactions. It depends how deep you want to quantify and apply caveats as far as what exactly all of these transactions are on each chain. But nevertheless, it does represent continuous activity irrespective of price in both cases. And just to contrast that a little bit of excitement, let's take a look at Avalanche. This is the C chain. Now, Avalanche has different architecture, different structure to their chain. It's different than ETH. It's different than BTC. I know this is hard to see maybe on the video, but you can see their transactions on chain had risen substantially in 2021, flattened out in 2022, and over the past couple weeks, basically a 75% decline. That is worth investigating as far as what's going on here. Who was all of this transactional activity previously? Where did it go? What happened to it? Well, it turns out this was a play to earn game, at least as far as I can tell, that was generating a significant amount of transactions on chain, which was also likely pushing fees on chain rather high because Avalanche always popped up towards the top of the list as far as weekly fees on chain. So it was a play to earn game, moved to a subnet, which is not on the C chain, and those transactions just don't show up here the way the UI is constructed, even though they may exist on the chain. But again, it's worth investigating what's going on here when you go from nearly 1 million transactions on the chain to 250,000, right? Is it the chain's problem? Are the nodes having issues? Was all of this activity fake previously, right? These are the things to consider when you're investigating this stuff on a day-to-day basis. Because when I saw that this week, I was like, okay, there's clearly something going on here that is probably behind this, and there was. But it's always worth finding that information. If we look at Bitcoin's active addresses, again, nothing super exciting here, but to me, that's fine, right? Price is sideways down. We're clearly in a bear market. We're down, 40, 50% from highs. It's the 8th or 9th red week in a row now, which is unprecedented in Bitcoin. Even in Legacy, I think the SPX is on week 8 or 9 of red candles as well. Just bloodbath everywhere, right? Nevertheless, we still have activity here. This isn't a bull market only sort of situation for Bitcoin or for Ethereum. There are active addresses here. There are transactions happening. There's a baseline of activity here. Again, whether it be mining, DeFi, I'll look at Lightning in a second as well. All of these things influence on-chain activity. Balances on exchanges flattened out a little bit as well for BTC. Again, nothing too exciting happening here. We're not seeing a mass swath of BTC being removed from an exchange, nothing like that. We're not seeing mass deposits. We're not seeing panic just yet. This specifically in 2020 either represented panic, getting coins onto the exchange as quickly as possible to sell them, or getting coins onto exchanges as quickly as possible to shore up collateral on margin, which was certainly an issue on some of these exchanges if you were leveraged long and prices dropping that quickly. So nothing super exciting here. Again, we're just checking. We're just trying to set the table for what's going on. ETH balances on exchanges falling, continuing to fall, holding at those lows. Again, nothing super exciting. A little deceiving because ETH has this proof of work, proof of stake transition, and some of these coins are being moved into proof of stake through exchanges. That's not included here as far as I know, but accounts for basically 10% of the circulating ETH supply. I'll take a look at that in a second, but that also represents a supply soak, right? Which is ultimately what we're looking at here. Where's the supply? What is it doing? Are people holding it? Are people using it? Are people selling it? Whatever it is they're doing, it has less and less to do with centralized exchanges by the day. Just as an aside, I was looking at volumes between Uniswap and Coinbase today. Despite the disparities in market cap, despite the differences between decentralized and centralized exchanges, their volumes are relatively the same on any given day. And you can say, again, caveat, well, Uniswap might be mostly bots, Coinbase might be mostly institutional. You know, you can try to tease it apart, but eventually you would think one of those valuations would start to move towards each, one another, regardless, right? Obviously, they're different vehicles, but something that I think we're going to see more and more of as centralized exchanges have to keep up with the times here. And this is evidence of that, as you're seeing ETH fly out the door, right? It's going elsewhere to do stuff, to be held in wallets. BTC, very similar. Bitcoin Lightning Network capacity, again, this is kind of like a debit card system where you can keep a tab open on the Lightning Network and talk to other nodes on the Lightning Network. Let's say if you want to open a connection with your coffee shop down the street, you could do that theoretically. And then you could settle that tab, at the end of your visit. And then that would show up as an on-chain transaction. The transactions that happen on the Lightning Network are completely outside of layer 1, is what it's called for Bitcoin. And they happen on layer 2. But in any case, you're seeing an uptick in capacity on-chain. This represents total Bitcoin. Now, it's 0.02% of circulating supply, but it is a type of supply soak where it has a job, it has a purpose. You're putting it to work in these Lightning Network nodes or on the chain in some way, right? That isn't to say you can't hedge against it elsewhere, but it is being put to use. And with Ethereum, their equivalent in my eyes is staking, which again is coming maybe August this year, maybe later. It's hard to really say. There have historically always been delays on this stuff. There have been some issues on occasion, right? This is the biggest, highest stake, no pun intended, protocol change that arguably any protocol has ever undertaken. This is bigger than a fork. This is bigger than anything. There are a lot of moving parts here, not only for the chain, but all of the dApps and DeFi and everything involved, right? You have to think, hopefully nothing goes wrong, obviously, but you also have to keep an open mind and think, what could go wrong? What do you do when it goes wrong? How big of an impact is that going to have on the near term, short term, right? Just be prepared. Not saying that I'm expecting something to happen, but there's just a lot involved with that process. It's being tested on testnets right now. So it's coming eventually. And again, this is 12 million ETH, almost 13 million ETH, sitting, essentially being vested, locked up. Some of it is liquid, some of it is not. But again, that represents a supply soak. Also worth checking in on the stable coins, right? What's going on? Tether continues to see redemptions, which is fine. It is currently still around 73 billion. People have assessed the risk of Tether to their own accord, and they've said yes or no on whether or not it's worth holding on to that for a variety of reasons in light of what happened with the other stablecoin, Luna UST. And rightfully, you're seeing some of that be de-risked and redeemed. I've seen no issues thus far of any redemptions on the Tether side of things. Usually people are pretty loud about that if they do happen, which has occurred previously. I've personally had issues with that, so I know it does happen from time to time, mainly in 2018. But so far that's running smoothly. And this is, there are all sorts of headlines about this, but at the end of the day, this is what should happen. Redemptions are normal. This isn't anything crazy. You're seeing USDC, on the other hand, sort of picking up that redemption on the other side, where people are maybe shifting from Tether into USDC. Again, that's fine. This is a free market. People are deciding for their own good whether or not they want to be involved with USDC or Tether, depending on the risks. USDC looks like it will pretty easily move beyond all-time highs in circulating supply in the next few weeks. Somewhere around 54 billion circulating would be that level, but look for that headline because that's coming eventually as well. So shifting over to some bright mode stuff here. Sorry for that. We still have to talk about correlations, unfortunately, correlations with legacy. I didn't get into crypto to trade a Nasdaq derivative, right? I don't think anybody did. But ultimately, currently, that's how it's trading. And we've strengthened that correlation since March 2020, as we're seeing not only institutional players come in, but we're also seeing less and less of other countries, specifically China, trading the market. So it's mainly US institutional. This is a comparison between BTC and ETH. I'll get to the ETH BTC price pair at the very end, but this is a really good indication of bull market, bear market, because in a bear market, we tend to get more and more correlated on the downside. And you can see from 2020, late 2020 to let's say Q2 2021, we were losing correlation, but since then we've been strongly gaining. This is 180-day rolling, and you can zoom in on this. It's a nearly a 90% correlation between BTC and ETH. Regardless of what's going on with staking and the merge and the supply and DeFi and all these other things, each camp likes to attack the other camp, but at the end of the day, we are extremely highly correlated currently in the current environment. BTC with the S&P 500, again, 180-day rolling, all-time highs in correlation, above 50% here. So if there are tremors and earthquakes and panic and shock and negative 20% days, negative 40% days on Snapchat, I think I just saw close, we're going to see that show up in volatility in crypto. It's unavoidable right now because of the correlations. So the question is, will this correlation end? How long will it last? Will it go higher, right? It looks as though we may be seeing a peak in the correlation. Too early to tell, much too early to tell. But again, since March 2020, right? Previously this goes back to 2013. Again, might be a little hard to see, but previously we were basically uncorrelated. We would dip and peak and trough. But since March 2020, we just gain on that correlation with the S&P. And the VIX, which is the volatility index, we are strongly inversely trading with right now. That negative 0.5, let's say. Again, 180-day rolling. It's just important to know this, right? Because you might be bullish or bearish on one thing and not understand the whole picture as far as the macro stuff. The bigger Bitcoin gets, for the crypto native people like myself, even I have to have a reality check here and try to determine what's moving prices at the end of the day. The network clearly isn't collapsing. People are still here using it. We might have gotten overheated, sure, and everything could use a bit of a pullback. But now it feels like we're really getting dragged by potentially legacy stuff, and the dollar as well, all-time high in inverse correlation with the dollar on 180-day rolling. This is the DXY specifically. So again, to see the DXY cool down a little bit, to see the VIX cool down a little bit, I think that's what we need to see to at least establish some sort of range first. This is a marathon, not a sprint. It's going to take 3 months, 6 months, I don't know, to finally figure out an accumulation range for people that are comfortable to get back in or to get in for the first time, whatever, right? It's going to take time. It's going to take a lot of time to repair the structural market damage. And if we're talking about sentiment, the fear and greed index, the next couple charts are from lookintobitcoin.com. I just love the site. I think it's perfect for anybody. You don't need to go on TradingView and look things up. It's all right here for you. But fear and greed index put together by alternative.me is as in the fear range as it was sort of at the bottom of 2018, the bottom of COVID 2020. We saw a score of 9. And this looks at a bunch of stuff. I don't know if they necessarily go into it on this website, but they go into a bunch of stuff, tweets, news articles, price, right? There's a lot of stuff baked into this, but it's not exactly a tradable metric. It's an alternative data point to consider, and it's just part of the buffet, right? Just another data point. There's lots of fear. I think we all know that. Hashrate, Bitcoin hashrate is more of a fundamental side of things, but hashrate pulling back a little bit, but overall still sort of pushing highs. We saw that migration out of China into the US. We're seeing more and more facilities being built in Texas, more and more infrastructural plays. We may see some of that Texas hash rate pull back into summer as we roll into summer in Texas. Something to think about. There are environmental factors, not just cost of electricity, but I'm curious to see how those miners, especially the new miners, will handle the heat and humidity in Texas throughout the summer. So again, something to watch for if you have this hypothesis like I do that, not all of them maybe will survive. We're probably going to see some interesting hash rate peaks and troughs here, but that's all part of the game, certainly. And if we look at the Puel multiple, which is measuring daily coin issuance in USD divided by the coin issuance for the year, this is another oscillator-like indicator that historically has done rather well at showing overbought, oversold. And we're not quite there yet. That's kind of the theme, I think. As much as we're correlated with the S&P, as much as we are negative week over week over week over week, right? I don't think we're quite there yet for me to say, yes, we've hit these levels on technicals, on fundamentals, capitulation's over, stuff like that. There are suggestions and whiffs of that. There's a soupçon of capitulation, but I don't think we're quite there yet. Another thing to watch is realized price and MVRV, which I'll get to in a second, but realized price measures the amount of coins that have moved on chain based on their average price, basically. So this is a complex metric, but if we're looking at all the coins that have moved in X period of time, we average that out, we can say this is where the average price is. So right now that's around 23.8. And this isn't necessarily a technical metric, but it does sort of show you kind of a max pain level historically for the market. So we're at 23.8. COVID tapped it. 2018, 2019 went below it, and we sort of consolidated below it. 2014, 2015, same story. We consolidated below it for an extended period of time. 2013, consolidated below it. So it's a level to watch, certainly. And you can measure that in a different way with MVRV, which again tells you we are close to being into that oversold zone. We are starting to get there. You can see where we came from all the way back in February 2021, where we were several multiples above the average price moved on chain, right? So there's a ton of unrealized profit, essentially, is what you can think of that as. And now we're approaching parity with realized profit. And then eventually we may see, additional downside below that. But this is something to watch for. Again, this isn't really an overnight sort of thing. This typically takes 3 to 6 months. It takes time to right the ship for sure. 200-week moving average is another one, currently at 22K. This is going to move up a little bit week over week, but for the most part, 22 is the level. So between 22 and 24, historically, those have been the levels based on all the bottoms we've ever had in a bear market where we have found a base slowly over time. So I would definitely take that into consideration, not investment advice, but breaking below these levels for an extended period of time would be an anomaly. That would be a new data point, right? So until that happens for me, I say, okay, look, here's where the technical supports are. We may break that, but we haven't historically. So until we do, then it's easy to say, okay, here's the 200 week. That's a great level. Or support will probably kick in. You can also look at the 2-year MA multiplier, which gives you the 2-year MA 5 times that in the red. And again, below in the green, as we're trying to map out these overbought, oversold territories, we are in the oversold territory here based on this metric. And you can see this does last quite some time, right? It could be a year, could be 3 months, could be a couple of months, but this isn't typically something where we just tap it real quick. We take a quick dip in the pond or the pool and just bounce right back up to all-time highs, right? That just historically has not happened. So again, take that in mind. Marathon, not a sprint. Another one I like, rainbow chart, fairly self-explanatory. Again, just telling you where we've been overbought, where we've been oversold. It's a data point. This is a buffet. Some people love this. Some people hate this. But again, historically, we have found support towards this bluer area, towards the bottom side. Shifting gears again to legacy, just want to hit on real quick. DXY finally seeing relief after hitting multi-decade highs at around 105. It's around 101, 102 today. Just ignoring what this is and talking about TA for a second, the power of a 5200 cross on something like this, the hit rate has been extremely high historically. There's a reason people say the trend is your friend. One way to establish that is to figure out, are we above or below the 200-day moving average? In a bear market, we typically get held below that. In a bull market, we typically get held above that. And the 5200 cross also is a significant turning point. And sure, this is an N of 2. Sometimes this is noisy, but ultimately, again, it's another data point to use. This is a buffet. Even if you're not a TA person, you can say, okay, how far are we above or below the 200-day moving average is another great one. This thing is extremely overbought. Again, just ignoring what it is for a second, just on a TA basis. It was due for some cool down, certainly. But the trend was very clear back in mid-2021. Even on backtesting, it's been clear. And as we're trading inverse to this, it would certainly be more bullish for BTC should this thing continue to reverse. VIX is another interesting one. So this is the fear index. And if we look at it all the way back to 1999, this is the weekly VIX, trying to figure out overbought, oversold, right? You don't have to buy into RSI or MACD or CCV or OBV, right? All these crazier metrics. Just look at where we're at, right? Relative to what's going on. This is, call it sentiment, call it fear, volatility. We are at historic levels for the VIX, which typically lives arguably somewhere around the 20 range, right? If 20 is neutral, 10 is, no fear, 30 plus, 40 plus max fear, tops out around 80, 90. This is 08. You can see where it went in 08. So we're definitely in elevated territory historically, right? So the question is, do we continue to trend up here in this like overheated fear zone? Do things start to cool off, flatten out? Because, we're looking at stuff like this, a retailer, again, this is a brick and mortar establishment. This isn't crypto that is just falling off the wagon, not necessarily commenting on even what's happening with retailers and missing earnings and inventories and all this other stuff going on. It's hard for crypto or anything in any market that's big enough to not be affected by stuff like this. Target, so retailers got hit last week. Snap, obviously, just massively, just getting crushed from all-time highs. But even this week, today down, I think 43%, something like that. Facebook, right? Netflix, these were all hit, have been continuously hit since the beginning of the year for a variety of fundamental reasons, some of which related to inflation, some of which not. But again, if we're connected to this basically at the hip, you could argue that we've done rather well in the face of this very large, broad sell-off in traditional finance in the US. Looking at ETH-BTC for a second, we're still in this is a chart pattern called an ascending triangle. Historically, if you look at, the percentages, right, this has a bullish bias. This should break up. In general, anytime you make a horizontal line, you don't even need to know chart patterns per se, but anytime you make a horizontal line like this, you typically want to break above that, right? Because we're knocking on this door. This should break up. It is currently sitting on its support. It is testing its support right now. ETH certainly has a narrative behind it leading into the merge into maybe August, maybe 2023, right? We might see delays on that, but I expect ETH to do something against BTC when that happens in the near term. And this is tipping its hand towards a bullish bias. We'll see if it actually plays out, but it's still looking okay. It's on the brink, certainly. And then lastly, just looking at DeFi Perp, which is an aggregate from FTX, market cap weighted, Uniswap, Aave, lots of DeFi stuff, let's just say. DeFi is also getting rather crushed, again, below the range, below the 200, very far below the 200. Arguably it's maybe the most oversold it's ever been against the 200 as a percentage. Certainly got to extreme oversold levels on RSI, which is a momentum indicator. We even tapped the S1 yearly pivot, which is just a measure of highs and lows of the previous year, and it gives you these ranges. And we also dipped into basically, the inception of this index in 2019 based on the volume there. So as oversold as this looks, as oversold as a lot of this stuff looks, it's going to take time, most likely, to figure out what it wants to be when it grows up, to figure out how to repair itself here in the next 3 to 6 months. So that's all for this one. Let me know what you think in the comments below. Like, dislike, share, subscribe, and happy trading.